Relations between China and the United States have been steadying over the decades, but differing ideologies on trade and commerce are at the hub of matters. With both economies going through systematic changes, some speculate that the superpowers are on the brink of a trade war. Joining me down the line is Bill Perry, US-China trade litigation expert. Bill, the Sino-US trade war, isn't this just about historical ideological differences?
No, not really. In the solar cells case against China, this started up several years ago, and congressional and senators were upset about $4 billion worth of Chinese solar cells coming into the United States. What they didn't realize was there's $2 billion of U.S.-produced polysilicon going to China to go into those solar cells. When the Commerce Department brought dumping duties and wiped out a lot of Chinese solar cells coming into the United States, the Chinese responded by bringing their own dumping and countervailing duty case against polysilicon from the United States. The largest producer of polysilicon is REC Silicon in Moses Lake, Washington. They deferred a $1 billion investment into Moses Lake and now closed the factory and moved to China. That is a trade war.
Well, China is trying to be more open to the West and to trade, so surely its protectionist attitude is waning now.
It's not a question of protectionism. That's too easy. When China joined the WTO, that goes back to the year 2000, they basically were able to take on and follow the same trade rules the United States does. So when the United States brings dumping and countervailing duty cases, the Chinese respond with their own. Most recently, for instance, in January, 4 cases were filed by the United States against China, including stainless steel, amorphous silica fabric, bus and truck tires, and geogrid. The Chinese have responded, and that covered 1.2 billion of Chinese exports to the U.S. The Chinese have responded and brought their own dumping and countervailing duty case against 1.5 and distiller grains, which are going to China from the United States. If you throw a rock at China, they're going to throw one back, and that's what you've got now, rocks being thrown on both sides.
Absolutely. But who's usually the instigator in this, and who do you think's more in the wrong, or are they just bad as each other?
The bigger issue is this issue of non-market economy. Basically, both Europe and the United States and many other countries consider China to be what is called a non-market economy country. Because of that, the United States does not look at actual prices and costs in China to determine whether the country is dumping or whether the company in China is dumping. Understand, China is treated worse than Iran, Syria, Russia, Ukraine, almost every other country in the world except for possibly Vietnam. The refusal to use actual prices and costs in China is a big problem. Whereas the Chinese don't look at the United States as a non-market economy country and actually use actual costs in the United States. The United States does not. The United States presently has anti-dumping and countervailing duty orders covering about $30 billion in imports from China. Those orders will stay in place for 5 to 30 years. So this is a big problem.
But China is actually now pushing for World Trade Organization market economy status. Do you think this will make a difference if they get it?
It would make a great difference if they get it, but there's a huge backlash developing. In Europe, this is a big issue because what happens, it's under the China WTO accession agreement. There was a 15-year provision in there. The United States is the first one that said China has to agree to be a non-market economy for 15 years. That expires on December 11th, 2016. Europe has taken the position that they're assessing the position and trying to decide whether or not to give China market economy status. In the United States, Commerce has already said no. This has become a huge issue in the political campaign right now.
So what's the latest sticking points today between the two countries?
Currency manipulation. But if you dig down and you find out that currency manipulation, the Chinese, both Hillary Clinton and Donald Trump have screamed that against China. Yet the U.S. Congress refused to put stringent restrictions on currency manipulation because President Obama and Secretary of Treasury Liu threatened to veto the bill if there were strict provisions regarding currency manipulation. Why? The United States does it too. And as Senator Orrin Hatch said on the floor of the Senate, we put it in here, currency manipulation. Other countries will turn around and use it against us for quantitative easing by the Federal Reserve Bank. Cyber hacking is another one. Again, you dig down, you find out that part of the problem is the United States does it too, or people in glass houses. That quote came from Director James Clapper, head of national intelligence. The United States government doesn't want to define state espionage. Dumping, again, all based on fake numbers. So you have a lot of arguments being thrown at China, but when you dig down, you don't find his money there. I mean, the Chinese can be very, very unfair in what they do, but they should be hit for what they're really doing, not fake numbers.
Thanks for watching. For more videos from the Voice of the Market, please subscribe.